Hi, Miss. Good day. My name is Evin Raj. I'll be doing part one. Okay. What is journal entry? Okay, a journal entry consists of date, account title, explanation, and it is recorded with corresponding debit and credit to ensure accurate financial statement. Okay, coming to my question one. Okay, for January 1st, QPS Training Sederam Berhad started the month with around 5,000 cash and 10K inventory. Okay, so coming to my journal, I debited uh, around 5,000 in cash account and I debited 10K in inventory account. And I also credited around 15K for owners equality. Okay, for January 3rd, purchase additional inventory on credit from a supplier worth 8,000. Okay, so in the journal, I debited 8,000 for inventory account and I credited 8,000 for account payable. For 5th January, sold goods worth 6,000 on credit to a customer with a cost of 3,500. Okay, so in the journal, I debited 6,000 for account receivable and I credited 6,000 for sales revenue account. Okay, moreover, this account has two double entry whereby I debited 3,500 for cost of goods sold account and I credited 3,500 for inventory account. Okay, for the 10th of January, paid office rent for January amounting to 1,200 in cash. Okay, so in the journal, I debited 1,200 for rent expenses account and I credited 1,200 for cash account. Okay, for 12th of January, purchased a laptop for 2,500 on credit to support business operation. Okay, so in the journal, I debited 2,500 for equipment account and I credited 2,500 for account payable. For 15 January, paid 500 ringgit in cash for an advertising campaign. So in the journal, I debited 500 for advertising expenses account and I credited 5,000 for cash account. Okay, for January 18, received cash of 4,000 from the customer for the January 5th sales. I debited 4,000 for cash account. I credited 4,000 for account receivable account. Okay, for January 20. For January 20, I purchased around 500 in office supply with cash. Okay, I debited 500 for office supply account and I credited cash. I credited 5,000. I credited 500 for cash account. Okay, for the 25th January, sold goods for cash worth 4,000 with cost of 2,200. I debited 4,000 for cash account. I credited 4,000 for sales revenue account. For this for this entry, there's two double entry whereby uh, I debited 2,200 for cost of goods sold account and I credited 2,200 for inventory account. Okay. Lastly, paid supplier 4,000 ringgit as a partial payment for the January 3rd inventory purchase. I debited 4,000 for account payable account. I credited 4,000 for cash account. Okay. For question 2, ledger account. From the journal entries, there are 5 ledger accounts, and the accounts are cash account, account receivable, account payable, inventory, sales revenue. Okay. For cash account, there are 7 entries, starting with 1st January opening balance with a debit of 5,000 ringgit, and on the 10th January, rent expenses with a credit of 1,200 ringgit, with a closing balance of debit 3,800 ringgit. How I get 3,800 ringgit is from opening balance debit 5,000 and rent expenses minus credit 1,200, I'll get 3,800 ringgit. Okay. Okay. To conclude all this, lastly, for 28th January, the closing balance for this day will be debit 6,800. Okay. For account receivable, there are two entries, and the final transaction will be on 18 January, which is the balance debit 2,000. For account payable, there are three entries, where the final balance will be on 28 January, uh, uh, with a balance credit of 6,500. And for the inventory, there are four entries. The last transaction will be on 25th January, with a closing balance of debit 12,300. Lastly, sales revenue, there are two entries. The last transaction will be on 25th January, with the closing balance of credit 10K. That's it. Thank you. Thank you, Pramod.
A very good evening, madam. My name is Rinesh, and this is my presentation, and I will be walking through the necessary adjustment of QPS trading second of January 31, 2023. These adjustments are vital for ensuring for the company's financial statements reflect an accurate financial position. We will cover adjustment for wages, payable, prepaid rent, distribution of asset and the allowance for doubtful debts. Additionally, I will explain how these adjustments are recorded in the journal and reflected in the ledger accounts. So moving to the first part, which is wages payable. So let's start with the adjustment for wages payable. As of January 31st, QPS Trading Center has RMC 600 in unpaid wages for work performed during the month. This is an explanation of the accrual. We recorded the expense incurred but not yet paid. So the debit is wages expenses for 600 and the credit wages payable for 600. So this reflects the liability owed to the employees for the unpaid wages. So now let's take a look at the ledger accounts. As of January 31st, the description of wages payable and credit is 600, balance 600. The explanation is this is the accrual of unpaid wages for January. So this wages payable account now shows a credit balance of 600, indicating the liability to the wages owed to employees. So next is prepaid rent. Prepaid rent, we need to adjust the prepaid rent. The company paid 1,200 on the January 10, which covers rent for the both January and February. However, only January's rent shall be expensed in this period. We need to recognize the portion related to the February as a prepaid rent. So the journal entry for this adjustment is debit prepaid rent for 600. This is for to record the portion paid for February's rent. So the next is credit rent expenses for 600. This is to adjust the expenses for February's rent that as initially recorded as part of the January's expense. So now let's take a look at the ledger accounts. The ledger accounts for prepaid rent is as of January 31st. Description is prepaid rent, debit 600 and balance 600. So explanation as go for this is this adjustment reflect the rent paid for February, which will be expensed in next month. So moving on to the next point, which is description of the laptop. Now we need to account for the description of the laptop purchase on January 12, which is the laptop was bought for around 2,500 and the description rate is 20% per annum. Since the laptop was purchased in January, we need to record the depreciation expense for this month. To calculate the description for January, we need to times by 20% I mean 2500 must times by 20% and divide by 12 months, so which goes to RM42. The journal entry for fixation as is follows: fixation debit description expense for 42 ringgit and credit accumulated description for RM42 ringgit. So now let's take a look at the ledger accounts for depreciation expense. As of January 31, the depreciation expense debit is 42, the balance is 42. For this, the expense for this is the depreciation on the laptop purchase at the rate of 20% per annum. So moving on to the ledger account for accumulated depreciation. As I said just now, the accumulated description amount now shows a credit balance of RM42, which reflects the depreciation accumulated on the laptop. So continuing the allowance for doubtful debts. Finally, and let's address the allowance for doubtful debts as of January 31st. The company's accounts receivable balance is 2000. Based on this historical experience, QPS trading estimates that 5% of the accounts receivable will be uncollectible. So the amount to be adjusted is 5% of the RM2000, which equals to RM100. So the journal entry for this adjustment is debit bad expenses for RM100 and the credit allowance for doubtful debt for RM100. So now let's take a look at the ledger accounts. So ledger account for allowance for doubtful debts is, as for 31st January, distribution is allowance for doubtful debts, credit is 100 and the balance is 100. And for this, as explanation, this is the allowance for doubtful debts based on the 5% account receivable. So in summary, these four adjustments ensure that QPS Trading Chandrika Bhagat financial statement as for January 2023 are accurate and in compliance with the accounting principle. That's all from me. I pass on the next presenter. Thank you.
Hi, my name is Tanindra Sivaraja and my metric ID is 012024092459. So now I'm here to present about trial balance overview. So the summary of the trial balance of the period. So first of all, for the assets, the cash debit will be RM 6,800 and the inventory will be 12,300. So the accounts will be receivable, which is 2,000. So for the office supplies 500 ringgit and the equipment is 2,500 ringgit. And for the prepaid rent is RM 600. For the second part, for the liabilities, for the accounts payable will be 6,500 and for the wages payable is 600. For the equity, the capital will be 15,000 and the revenues and expenses, sales revenue will be 10,000. Cost of goods sold is RM 5,700 and for depreciation is RM42 and wages is 600 and rent is expenses is 600. Advertising expenses is 500. Bad debt will be 300. For adjustment, accumulated depreciation is 42. Allowance of doubtful debts is 300. So the trial balance totals are balance RM 32,442 for both debit and credit, ensuring the accuracy of the accounts. This provides a clear snapshot of our financial position and forms the foundation of preparing financial statements. That's all from me. Thank you so much.
Good day, everyone. So these are the questions, or this is the part that I'm doing, part 4. And it is a statement of profit or loss and then statement of financial positions. So as we can see here, there are two tables, QPS trading. The first one, as we can see, there's sales revenue in the amount of 10,000. And then as we can see, there's also the purchases, which is 8,000, and the cost of goods, which are 18,000, and then inventory over here, it should be deducted, which is 12,300, and the amount is 5,700. So from the 10,000, we'll be minusing all bills up, deducting 5,700 from it, and then we will get we would be getting an amount of money, which is 4,300, and with that we would be adding the expenses, which are rent, advertising, debt, depreciation, wage, which are 600, 600 again, 500, and 41 ringgit 60 cents, and 100 ringgit for the debts. So totaling up everything, it will be 1,841 ringgit 67 cents. And then from the 4,300, we will be minusing this amount of 1,841 ringgit, and we will be getting a net profit of 2,458 ringgit 33 cents. So moving on to the next question, the statement of financial position. For the non-current assets, there are three amount of figures which we could label it as office equipment. For the first amount, which is 2,500, and the second amount is 41 ringgit 67 cents, and the third amount is 2,458 ringgit 33 cents. Okay. Yeah, pause button.
जोर से बात कर चारण बनाने புரியல இல்ல so for the current assets, yeah, 1, 2, 3, 4, 5. There are 5 there are 5 assets, which is closing inventory, cash, receivable account, prepaid rent, and office supplies. So it will be 12,300, 6,800, 2,600, and 500. So totaling it up, we will get amount of 2,200, 22,200. So from that amount above over here, from this amount, we will be totaling it up, and then we will be getting this amount. And then moving on to the finance, moving on to this owner's equity, which is 50,000. The capital will be 2,458 ringgit 33 cents. And the net profit will be 17,458 ringgit 33 cents. Moving on to non-current liabilities. There's an amount for the current liabilities, which is 600. Current liabilities for 600, 500. And then account payable, wages payable, and then the total amount will be getting the same. We should be getting the same amount from the top and the bottom. So that's about it. Thank you.
My name is Muhammad Iqbal bin Muhammad Adam Ho, and I will be presenting about the question number 5. To solve this question, I prepare a bank reconciliation statement for QPS trading. As of January 31, 2023, the bank statement shows an ending balance of 6,800, which I adjusted by adding a RM 1,000 ringgit deposit not yet reflected, and deducting a 500 check that had not cleared, and deducting a return customer check of 300, resulting in an adjusted balance of 7,000 ringgit. And next, I recorded 2 journal entries to update the company books, one for a 50 ringgit bank service charge by debiting bank charge and crediting bank account, and another for the 300 NSF check by debiting account receivable and crediting bank account. This adjustment ensured the financial records were accurate and reconciled with the bank statement. And that's all for me.
Hi everyone, today I will to explain and present about accounting assignment. My part is part 6, inventory valuation. As of January 31, QPS Trading Ltd has 30 units of inventory on hand. The company made the following inventory purchases during January. Effect of FIFO on accounting: cost of goods sold, COGS 7,200, units sold 50, RM 100, 20 units and 110. Effect on income statement. Third one is higher gross profit and net income during inflation during the lower. And COGS is the second one is ending inventory. Ending inventory 3,500, 30 units 10 and 110 20 units. Effect on balance sheet. And higher asset values as inventory reflect recent higher costs. Third one is tax implication. Higher taxable income leads to. And another point is increased tax liability during inflation. Number 4 is cash flow. Higher taxes may reduce cash flow despite higher net income. And the last one is reporting consistency. Have 2 points, and first point is reflect more accurate inventory valuation on the balance sheet, and another point is enhances comparability and decision making reliability. That's all for me. Thank you.